Angeline and welcome to Beat the Street, the show that gives you all the tradable news ahead of the Wall Street Open. Now coming up, market momentum. Can the market melt-up continue with the Fed, big earnings and jobs on deck? A tech bonanza. Meta, Microsoft, Apple, Alphabet and Amazon all report this week. And oil prices in view as well. A drone attack on US forces in Jordan adds to Red Sea tensions. Now, good afternoon. I'm Angeline and welcome to this new edition of Beat the Street here on IGTV. Not long now before Wall Street starts trading, this is how equity markets are looking. And let's have a look at the volatility index too, if we may, because it is still trading sideways in this trend channel here between 15.8 and also that 13.8 mark there. What is actually interesting is if you zoom in, let me give you an hourly view. If you zoom in, it is starting to tick ever so slightly higher. Well, Axel Rudolph has been watching this very closely for us. Axel, what's the latest?
Well, Angeline, today I would like to have a look at the volatility index, the VIX, and this is because we've got the remaining 5 of the Magnificent 7 stocks reporting, and obviously that could lead to some volatility in the S&P 500 as they make up about 30% of it. And therefore, I believe we could see a spike over the next few days, and that would be confirmed if we were to see a rise above Friday's high at 1484. That could then perhaps take us very quickly back up again towards the highs seen back in December and also the current January high between 1592 and 1604. But if we were to see such a spike, I wouldn't be surprised if we were to head even higher and perhaps hit the red line here, the 200-day simply moving average around 1686. Now, if you were to trade this sort of setup, it's probably a good idea to put your stop below the last lows, the recent lows we've seen between December and January of this year. So that would be basically this case 1374, just below these lows here. But from a technical perspective, I wouldn't be surprised if we were trading in a sideways trading range here, and if we were heading back up again towards the top end of that sideways trading range over the course of this week.
Really good timing, Axel, looking at that before the Magnificent 7. Speaking of which, let's cross over now live to Chicago, where Josh Caberna is waiting for us. Josh Fabian, rather, from Tasty Life, part of IG Group. Thank you so much for joining us, Josh. It's a momentous week, if not the most important week in the US earnings calendar. Give us a snapshot of the mood music, your side of things.
So this is absolutely going to be the busiest week we've seen this year so far for stocks. We've got Amazon, Apple, Meta, Google. So the expectations in the market have already been set pretty high, I think. We've already seen the tech sector within the S&P 500 is up over 5% for the year. So I'm very curious to see how these stocks actually do perform because it's very clear that the expectations are already in place.
And what are we going to see in terms of the melt-up? Are we going to see a continuation of this melt-up if we get really good earnings?
It's a great question. Right now, and you mentioned it earlier, market volatility is very subdued. So I think if we do get good earnings, and I think the more important aspect will actually be the outlook that these companies discuss for the rest of the year. I think if that's positive, then the path of least resistance appears to still be higher.
And just a really quick question whilst we've got you, Josh. These renewed tensions, the drone attacks and what it's doing to oil prices, is that just a continuation of the sort of rising tensions there, or do you think this actually is a pivotal point?
I think it's a potential pivot point. Clearly, everything escalated over the weekend. The expectation here is that there will be some sort of response. The question is the magnitude of that response. Currently, the market doesn't seem overly concerned. Oil is still down on the day. So I think there's potential for this conflict to escalate, but I think we're in a wait and see mode.
Right, thank you very much. We have to leave it there. Josh Fabian from Chicago, Tasty Live, part of IG Group. Now, amid all of that, if that wasn't enough, we also have a lot of central bank action this week. The Fed expected to maintain its key interest rates at current levels. Fed funds rate target range forecast to remain between 5.25 and 5.5%. for a fourth consecutive meeting. Fed funds futures also pricing in a 97.4% chance of no change, but there is a 59.7% chance that the Fed will cut by at least 25 basis points at its March meeting. Now, the Fed hopes to navigate a soft landing for the US economy. At its December meeting, the Fed shared its latest views on US economic growth. Full-year GDP growth seen at 1.4% in 2024. Jobless rate also seen averaging around 4.1%. It's also likely to continue to allow up to $95 billion in assets per month to reduce its balance sheet, currently standing at around $7.7 trillion, still far from the pre-pandemic size of $4.15 trillion in February 2020. And then on Thursday, watch out for the Bank of England. It's seen keeping interest rates unchanged as well, although Governor Andrew Bailey and other top Bank of England members have been saying until recently that a rate cut would be premature. They also warned about the risks from strong wage growth. That said, though, recent data on headline inflation, wages and economic growth came in weaker than expected, suggesting that the Bank of England could relax its line on borrowing costs. Now, as I mentioned earlier, this week will be arguably the most important of the US earnings season, with reports from the four biggest US companies, or amongst a flood of earnings, might I add. On Tuesday, we've got Pfizer, General Motors, Advanced Micro Devices, Microsoft, the newly world's biggest company in terms of market cap, and Alphabet, fourth largest US company and fifth largest in the world. Wednesday, Boeing and Qualcomm, and on Thursday, we have Apple, the second biggest company in the world, and Peloton as well, Meta Platforms, and Amazon, number 4 in the world. The two oil giants Chevron and ExxonMobil will conclude the week on Friday. There are obviously a lot more earnings expected in the next few days. These are just the ones that are notable and, of course, key to IG clients, because many of them are all session stocks on the IG platform, which means you can trade from 9 a.m. until 1 p.m., giving you the opportunity to make the most of all reports pre and post session. Now, just taking a look at oil prices for you as well, because I mentioned earlier those drone attacks could be pivotal, and we're keeping a close eye on that for you. Just bring up crude here. US crude, as you can see there, that's the hourly chart. Quite a lot of movement. Let's just show you the daily picture. That's 1 day. And currently it has come off slightly, but in the previous session, we did see quite a leg up, and this is after a drone attack on US forces in Jordan added to worries about disruption in the Middle East. And this comes as Houthi rebels stepped up their attacks on vessels in the Red Sea, hitting a Trafigura-operated fuel tanker. Now, ANZ analysts said that disruptions to supply have been limited, but that changed after the Trafigura incident. They also said that with oil tankers linked to the US and UK now under threat of attack, the market is likely to reprice the risk of disruptions. Now, before we go, let's have a quick look at how the market is looking, and it is quite a muted affair. No surprise given how many companies are expected to report this coming week. Among them, the so-called Magnificent Seven, let me get that out, or otherwise known as the Mega 7 as well. Microsoft, Google, Apple, Amazon, and Meta. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline on Twitter. This is IGTV.